Welcome back. Kunal Shah of Nirmal Commodities now joins us on the show. Kunal, hi. The much anticipated event is done with now, and on expected lines, 25 basis points of a rate cut is what we are looking at. And the buying ahead of the event is something that has turned into a profit taking right now. For some time now, you've been calling this rally done. You've been advocating selling on rallies as well. From these current levels and with the bit of a profit taking that we're working with right now, do you see it deepening, and what are your target levels now?
Okay, yes. So, like you rightly said, we've been advocating that at $37.50, gold was fully priced in. All the positive news were priced in. And the moment yesterday rate cut came from Fed. So, one of the interesting thing about yesterday's rate cut and their statement after that is they clearly mentioned that this is just the risk management. They are not anticipating any recession or a severe downturn. Just the labor market is in a bit of stress right now, and apart from that, things are not that bad, and that itself is one of the major reasons why gold should have witnessed profit taking. So there's no question about recession. They've upgraded the growth outlook going forward. Then why gold should really do well from here? And if you see the consensus trade lately, people have been recommending. We are seeing reports coming out at 5,000 gold at $5,000, $8,000. And even we've seen a report stating gold can test 12,000. So it was becoming a consensus trade in a near term that there's only one thing which is going to go up in the world. That was gold and silver. That's it. And that itself was dangerous. So we are seeing profit taking. This is the behavioral aspect of the market. Whenever you see such kind of scenario, generally you tend to see the reverse trend taking place. So in near term, we are expecting gold to remain under pressure, and this profit taking can intensify. Gold can go down on COMEX to levels of $3,600 and presently trading at around $3,670. So expecting more profit taking to come. And on Indian bourses, gold can come and test levels of around 1,07,000 or 1,06,500 somewhere. Those are the levels, we'll reconsider to buy. But right now, it's a sell on rise market. All the positives are priced in, and there is too much optimism around.
Oh, well, absolutely. While you are suggesting a sell in gold, would you say the same for silver, at least for the near term? And what are the levels to buy here? Because a lot of people want to buy base metals. There is a very, very positive scenario continuing for that one. So for silver and for copper, how would you look at those markets?
Silver looks very strong fundamentally, but when you see gold going down the way it did right now, silver is likely to witness the selling pressure also. So I see silver retracing back towards levels of $40 on COMEX. And in India, that should translate to another 3 to 4% downside. So 1,18,000 or 1,17,000 is the base I see silver forming at. And I see in near term, silver will remain under pressure. The long-term outlook still, I'm very much bullish on silver. But in near term, the pressure is likely to persist. As far as copper is concerned, I'm very bullish on copper. Now, whatever is happening with China, the positive talks, the sense of positive talks between US and China, and the expectation of stimulus building over there, and copper market the concentrate market likely to witness big deficits. China rebalancing the smelting capacity likely to be weed off. All these reasons are very bullish for copper. 900 rupees, you can go long on copper, nothing to lose, 925, and it should not go below 885. So we are bullish on copper and silver, but silver, I would still say wait a bit. Copper, you can continue to buy.
Let's go slightly longer term now, Kunal. And while for the near term, you said you were expecting another $40, $50 of a decline in case of gold. From the all-time highs yesterday, we've seen gold decline almost by $50 to $60. But if you look at slightly longer term, and this is even after the US Fed meeting done, banks have reiterated that their 2026 targets on gold just about still continue. And yes, they do expect a near-term correction and a sharp one at that. So if you had to give the best targets on the lower side for investors to look at, what would that be?
I would say gold has a potential to even go down till $3,500 levels on COMEX. There is too much pessimism for the US dollar right now, and everyone is expecting dollar to crash. It doesn't work like that. There is no other currency available in the world which can replace dollar. And people are talking that the role of gold in that kind of scenario. So all different sorts of theory are coming and hitting in the market. So I am of the very firm view that $3,500 we can witness. But I'm not suggesting that gold is in a structure going to enter into structural bull run. So the problem because of which gold prices are up, that will continue to remain for the far longer time. So I would say next year, gold is still poised to give you 10%, 12% return. That kind of scenario is still there. So I would say this year, 3750, 3800 looks top for the year. Next year, perhaps $4,000, $4,100 again can be tested because the US debt problem, because whatever the reason for buying gold will continue to exist. But for the time being, $3,500 can be tested for the comics future.
Okay, we'll keep an eye out on those levels. But next year, again, we could keep an eye out on 4,000. That's the word coming in there. Kunal as well as Manisha, thank you so much for joining us and talking to us about all the commodities that we should be keeping an eye out on going forward. On that note, let's sip it a very short break. We'll get you a special discussion on REIT market, especially after the SEBI's reclassification that's come in for REITs as equity. What does it mean? All of that after the short break.